Use candlesticks to generate profits. Hey guys, welcome back to Tradingfyive. This is the channel which provides you various informative content on stock market as well as technical analysis. So the topic of our today's video is use candlesticks to generate profits, wherein we will learn how can we leverage the candlestick chart system to make our trade profitable and to square it up in green. And if a beginner who does not have ample knowledge of technical analysis in the market has landed up on this video, then this video can benefit you a lot to improve your skills of technical analysis, as candlesticks plays a very important role in price action and technical analysis. So don't take the risk to skip this video, watch it till the end. Just grab a pen and a paper and note down every important things in this video. And one more thing is that I really want you to subscribe to this channel so that you do not miss any videos, any information on stock market and technical analysis. So let's get started with what is candlesticks. So you see, candlesticks is basically a chart system which makes use of candles. In technical analysis, there are many chart systems like the line chart, wherein the movement made by the stock is represented by the line graph. And another one which I remember is the bar chart, wherein we make use of the bar graph to represent the movement made by the stock. And just like both of these, candlestick is also one of the chart system that makes use of the candles to represent the movement made by the stock. And as you see on your screen, that's how a candlestick chart usually looks like, composed of green and red candles. And this is the candlestick chart of Bank Nifty, wherein each of the candle represents the movement made by that stock in a week, in a month or in a day, depending upon the selected time frame. And the chart which you see is the daily chart of Bank Nifty, which means each candle will represent the daily movement made by Bank Nifty index. And as you know, the whole candlestick chart is composed of green candle, which is called as the bullish candle, and with the red candle, which is also called as the bearish candle. Now I hope you are familiar with the term bullish and bearish. Bullish is matlab when the markets are rising, the price is increasing. At that time, we say that the markets are bullish. And bearish is the situation when the markets is falling, the price is moving downwards. And that's a quite basic concept. Now let's get back to the candles. Now as you see, the greenmost part and the redmost part of the candle is known as the body of the candle. You can see that the specified green and red portion of the candles on your screen, those are called as body of the candle. And the tail of the candle, the thread-like structure what you call, is called as the wick of the candle. These are what we can say as the parts of the candle as body and wick. Now let's understand individually what a bullish and bearish candle actually means. Let us consider the green candle. You see the bottommost part of the body of green candle is called as open. Open is the price level at which the stock starts to trade when the market gets open in the morning. And the uppermost part of the green candle is called as close. Now close is the price level at which the stock is trading when the market gets close. And for the wick, the lowermost part of the wick is called as low. And low is the lowest price level achieved by the stock in that time frame. And the uppermost part is called as high. And just like low, high is the highest price level achieved by the stock in a particular time frame. So if I had to give an example for a green candle, let's consider in the morning around 9:15 when the Indian markets open. Suppose the stock is trading at 100 rupees and then makes a low of 90 and a high of 110. In the evening when the markets are closing, the stock closes with the market at around 105. So the open of the market will be 100, the low will be 90, the high will be 110 and close will be 105. And as you see, the close is greater than the open in a green candle. So this depicts the bullish movement of the market. In opposite to the green candle, we have a red candle, which is called as the bearish candle. The main difference between green candle and red candle is that the uppermost part of red candle is called as open, whereas the lowermost part of the candle is called as close. We know that in green candle, the uppermost part is close and lowermost is open. And in the red candle, it is just opposite. And the lowermost wick is called as low and the uppermost wick is called as high. And here as you see, the close is less than the open, which depicts the bearish movement in the price. Now this simulation will help you understand more about candlesticks. In the morning, the stock opens and if itself in the morning, the stock gets a buying pressure, then a green candle is formed just like this. Whereas in opposite to this, if the stock receives a selling pressure, a red candle will be formed showing a bearish movement. I hope you understood what is candlesticks and its complete basics. If not, I request you to replay a few minutes of this video. Moving further, let us understand about why only candlesticks. That is, why most of the technical analysts prefer candlestick as their chart system. There are many other chart systems like the line chart which are more convenient and simple to understand as compared to the candlestick chart. Then what is the reason behind wide use of candlestick chart? Okay, to understand this, first let us consider a line chart. So in the line chart, the only data which we can derive are the close points, which you can see are depicted in black dots on the screen. And close point, as you know, are the price level at which the stock stops trading when the market closes. Okay, so this is only the piece of information that a trader can have using line chart. And this information is truly insufficient to precisely analyze the sentiments of market and to trade upon. But when it comes to a candlestick chart, as you see on your screen, we get open point, close point, high and low made by the stock. And this type of data helps us understand the potential movement, the sentiment of the market, which I think is quite beneficial for a trader. And this is one of the reasons why candlestick pattern is most preferred as chart system. And also one more reason is that we can make multiple combination, multiple patterns using these candles, which are called as candlestick patterns. And this candlestick pattern are a certain combination of the candle that helps us to determine whether the market will be bullish or bearish, or whether there will be a reversal or continuation in the market. These patterns play a major role in price action and thus helping us understand whether bulls are gonna take over the market or bears are gonna take the grip over the market, or whether there will be a situation where both the bulls and bears are on a same pace, causing indecision in the market. And if you look at the candlestick pattern, they are broadly classified into three types. First is the single candlestick pattern, wherein the patterns are formed using one candle only. Next is the two candlestick pattern, wherein combination of two candles form a certain pattern, which will help us understand whether there will be a reversal or continuation in the market. Next is a three candlestick pattern, which is same as the two candlestick pattern. The only difference is it is made up of three candles. And further in this video, we will only understand single candlestick patterns, since two candlestick pattern and three candlestick pattern are a very vast concept, and I'll make a separate video on them. So let's just talk about single candlestick pattern. The bullish Marubozu is a type of single candlestick pattern which indicates strong bullish momentum in the stock. And here you see this is a type of candle which does not have any wick or has a very tiny wick. The open of this candle is almost equal to the low and the close of the candle is almost equal to its high. And when a bullish Marubozu occurs in a chart, it indicates that the bulls were in control all the time and the bears were completely silent, and thus it is bullish in nature. Next is the bearish Marubozu, which indicates a strong bearish momentum in the market. And as you see, it is a complete red candle with no or a very tiny wick. The close of this candle is almost equal to its low and the open of this candle is almost equal to its high. And if such candle appears in the market, it indicates that for that time, the bulls were silent and the bears were completely controlling the market. Next one is a doji. And as you see, the body of this candle is very small and it has a very huge wick. And this type of candlestick pattern does not indicate the bullish or bearish nature of the market. Rather, it shows an indecision in the market, where neither of the bull or bear is strong. And such candlestick pattern, when spotted in the chart, is likely to indicate a reversal in the market. Now let's consider an example from the market. And as you see on your screen, this is the daily chart of Nifty 50 index, and its timeline is around 2020, where the stock market crashed due to COVID crisis and after then showed a great recovery. And as you see, that's a quite downward move from the Nifty. You see, the price is completely falling free. And somewhere at the bottom of this trend, you see a candlestick pattern forming. And yes, you guessed it right, it is doji, which is showing an indecision in the market. And just after the doji, there comes a candle which is quite similar to the bullish Marubozu. And now you can see this combination, a downward fall, doji candlestick pattern indicating indecision in the market, and a bullish Marubozu indicating strong bullish movement. That means there are high chances of reversal in the market. And you can even figure out on the chart that Nifty made quite good recovery after these signals. And this is one thing amazing about candlestick patterns, and that's why most of the traders, most of the technical analysts prefer analyzing on candlestick charts. And let me just tell you one more thing, this is quite important, so listen it carefully. Never take the trade directly on the basis of candlestick. You must wait for confirmation of that candlestick pattern. And this was one of the mistakes I vigorously made at the start of my trading career, that is buying directly on the candlestick pattern and not waiting for the confirmation, due to the fear of missing out of the trade opportunity. And if that trade favors me, it was profit, or else my portfolio was many times red. And this is what I don't want you to repeat. It's just like learning from my experience. Okay, so I hope you understood the video, the concept of candlesticks, how the patterns are formed using candlesticks. And for a 2 candlestick pattern and 3 candlestick pattern, I will surely make a video in some coming weeks. So lastly, thank you for watching this video till the end. If you like this video, please hit the like button, share this video as much as possible, and do not miss such many contents on stock market as well as technical analysis. subscribe to this channel so that I can see you in the next video.